Hello, everyone, and welcome to today's Trade Smart Tuesday, second show that we've ever done like this. We've done a lot of shows, but this is the second time that we're doing Trade Smart Tuesday. Today's topic is a very timely one. We're going to be talking about pullbacks, pullback buys, what to look for, how they should look, and we're going to go through several models of them. We're going to talk about Spotify, Paycom, most recently Kava, and trade that happen to be in right now, Twist, TWST. We're also going to follow up on Burke, BIRK. We talked about that trade last time, going into earnings, why I was buying it ahead of earnings, and talk about the results that it's had. For those of you that are joining us for the first time, welcome. Drop into the comments where you are watching from, and let's dive in. Alrighty, so let's talk about pullback buys, and we'll start with Spotify. Now, Spotify is a model pullback. This one happened in January of 2024. Let me know if you traded this one back then. I'm curious to hear how many people might have been in this one. This was a great pullback buy for a number of reasons, and you're going to notice that all of the pullbacks that we're going to talk about today follow the same characteristics, right? So here's what Spotify had back here, back in January, and what you can use back then to find it again and again today. Well, whether you're looking at Spotify or any other type of pullback, when you see this kind of action, it's going to trigger something and you'll be able to replicate it in the future. So, one of the things about Spotify is that it was the leader of its group. One of the things that I love about uh, pullback buys is that they happen after the leader has started to pull back, right? That's one of the great things about them. So we don't need to just buy any old pullback. We could wait for the leading stocks to set up breakout. If you miss the initial breakout, totally okay, because what happens, they tend to pull back. And when the pullback is very constructive, like this one, it could give you a nice, clean, crisp entry where you might only need to risk 4% and have what turned out to be about a 15R trade that ran 64% between, well, what is that, January 4th and about April the 5th. Right, so what was so great about this here? Well, a few things, right? One, it was an established leader. We want that. So we want to have it to be the leader of its group, but we also want it to be in this steady uptrend. This is what's called the stage 2 uptrend. If you remember that from a few other live streams that we've had. Stage 2 uptrend is when you have all the moving averages stacked on top of one another and they're all turning up like this. This is very constructive action over here. Then what will happen is that price starts to pull back and consolidate and then flatten out right around the 21 period, and sometimes you'll have around the 50-day, but typically in leading stocks you'll have this happen right around the 21 period moving average, where it pulls back and pulls back and pulls back and then tightens up, and it gets nice and tight right around here. And sometimes, not always, but sometimes you'll start to see a positive reversal like this one, where price pushes lower, reverses higher, and closes right near the 21 period and also the 5 and the 10. When they start to get bunched up like this, when it starts to look like a knot, when it starts to look like a rope, that is a positive sign. Also, on this one here, you see how price pushed through and it did that on elevated volume. That's something else that we like to see. One other thing to note on pullback buys and feel free to type into the chat if you have questions or comments, is this right down here. That line, that's the relative strength line versus the S&P 500. I like to keep that on my charts. And if you notice, right on that day, and let's draw a little circle around that. What do you notice on that? Which way is this line moving? Is it moving up, down, or sideways? Well, right there, it's starting to curve back up, right? That is a sign that at this point, Spotify was starting to outperform the S&P 500. Not only that, this relative strength line was also in line with the current price action. So price is headed up over here, and this is exactly what we want to see. Well, when we have these pullback buys, we want to see price tighten up. We want to see, and I'm not sure if I mentioned this before too, but you notice volume drying up down here as prices getting tighter and tighter and pulling back. It's another great characteristic to see. Let's take a look at another one. Let's take a look at what Kava did. Fairly similar in every possible way. In fact, this was a trade that I was in. This is a trade that I was in, and many of our members took as well. So here's what Kava did back in April, right? And this chart is has a bunch of annotations on it. Hopefully, hopefully it's not too bothersome, but I'll walk you guys through it and let me know what questions you guys have, because this still has all my buys and sells and what have you. But let's turn that off for a second. So you can see how Kava was a leader, and it was the leader of its industry group, and it was its leader in its industry group for a long period of time. I put this back on temporarily. You see all those little SL marks? I manually annotate that every single week. And what that stands for is sector leader. So every time that this stock and any stock qualifies as a quote unquote sector leader, I want to annotate it on the chart. So that way, when it pops up again and again and again, I'm fully aware that, hey, this one is special. And when it gives me an opportunity, I should take special notice of that. So when we come over here, right, and turn off all that, the drawings. So when price is pulling back like this, and I see, wow, look at all this. Look at how volume is drying up right along the bottom over here, and how price is tightening up around the 50-day moving average, and all those moving averages are getting all nice and tight, just like how we spoke about before. And then you get this upside reversal again. It's time to pounce. And that's exactly what we did. This time had to risk 6%, just about. That's okay. It's within the range. Now, I want to mention here, it's important for you to have a range for how much you're going to risk on a trade. You don't want to be risking, say, 5% on most of them, but on this trade, you're going to risk 20%. Right? It's important to have set parameters for how much you're willing to risk. Yeah, you can push beyond a boundary a little bit, but you want to be very careful with that. It should fit your business plan. The math should work. If you start to risk too much on any one trade, you have to take a real close look at the math of your system, all the different stats. So that way, if the math doesn't work, right? So let's say that you decide, oh, you know what? Just this one time, I love the company. It has such a great story. This time, I'm going to allow this to drop 20%. Well, how does that that work out if you start taking a 20% loss here, a 20% loss there. That can really eat into your profits most of the time. For most trading systems, a 20% loss is a big no-no. Um, you you absolutely have to make sure that the math works for any kind of trade that you're going to take. For me, and 6% is still okay. 7% is stretching it a little bit. That the absolute most that I'll ever go to is 10%, and that's in the best of best conditions. Um, Anyhow, back to this. Back to Kevin. Sorry for getting off on a little bit of a tangent there. But with this, what happened here, right? You have all those moving averages that are all nice and coiled over here. You have the stochastic starting to turn positive. Take a look at what the relative strength line is doing. It's starting to curl back up. Volume is elevated on that upside reversal right towards the end, right? And you might say to yourself, and I know that you might say this to yourself because I used to ask myself the same question. Well, what about this? What about this upside reversal there? Isn't that good? Price ran down to the 50-day moving average and pushed back to the upside. I want to buy that one. No, no, you don't. The reason why, right? And well, here's the reason why I wouldn't do it. If I'm going to measure between my entry and my stop, that right there is over 9.5%. That's real close to the maximum that I would want to risk. A few other things happening back here too, right? At this point, it's still wide and loose. Price hasn't tightened up yet. Price had this nice big run, and now you have some wide and loose bars in here. This needs time to digest. Even if you were Johnny on the spot, and let's say that you were able to buy right at the 50-day moving average, there's a few people that are able to do that, and God bless you. That's not me. But even if you're able to get in right there, that would be a halfway decent option. Like let's say that you got in right at the 50-day moving average, and you were able to get a 10% gain on that. Well, that would have given you 4-to-1 upside. But you're still only making 10%. This is a trade that over here, when it was finally ready to take off, this one ran 55%. And it's still constructive. Let's take a look at one more. Let's take a look at TWST. How you guys doing out there? Do you have any questions on anything that we've said so far? Put it into the chat. Let me know. Uh, the reason why we're going through these pullbacks again is because the market is starting to show more of these types of trades. Now, each one of these, right? TWST, it's on the screen right now. Doesn't it look very similar to what Kava showed us? Doesn't it look very similar to what Spotify showed us? The patterns repeat over and over and over again. That's why we want to pay attention. Now, what's so great about TWST, right? Maybe you're very observant. Maybe you saw that, oh, you know what? I remember that SL flag, that sector leader flag. There's only a couple of them on here. So why would you even buy this? That would be a good question. The reason why is because the sector is hot. The group is hot. And so when the group is heating up, that's something else that could put the wind in your sails. That's part of what had me interested in TWST. But it wasn't the only thing, right? Price had run up, pulled back, started to tighten up right here, right? Nice reversal, nice upside reversal here. But what really had me interested in this was that I drilled down to the 30-minute time frame. And when I drilled down to the 30-minute time frame, over the weekend, this one was on the trade ideas list. If you were on our free newsletter, marrowwealth.com/newsletter, this one was in there. Right? Every single weekend, I put out a trade ideas list. You could get that list for free. It's in marrowwealth.com/newsletter. Went into a bit more detail with members for it. Whole trading plan, where I'm planning to enter, where I'm planning to exit with a loss, set up the alerts and all that. Had the alerts set at $42.72. Price breaks out, right? It starts to break out at the open. It stays right around this level here for the first couple of minutes. By doing that, it tells me a couple of things. One, it tells me that I don't need to put my stop at the daily low. I could use this intraday low. And by using that little flag pattern right there, rather than risking what would have been about 9%, I'm able to risk 3% on this. And today I just took my first scale out. I took my first scale out at 10%. But the bigger point is that all these patterns, they all look the same. They all look the same. And so if you're studying the same things over and over and over and over again, your eyes are going to pick them up. And you'll be able to spot them that much quicker, that much easier. And that's going to be part of the thing that allows you to do this fairly quickly, part-time, stress-free. Doesn't all that sound good? That's what I wish that I would have learned so many years ago. Right? I've been trading now for 25 years. The first 10 were an absolute nightmare. If somebody would have beat me over the head and taught me that earlier on, well, I'd be trading full-time and coaching much sooner and have even more books on the shelf. But anyhow, that's neither here nor there. Thank God that I'm here, and all praise be to God. So this is where the twist is right now. I'm continuing to let this one run. And that's really that's also part of the strategy. This isn't just this part isn't just for pullbacks. This part is for anything that you trade. The step one, well, for any kind of stock that you're trading, especially if you're trading the way that I like to trade, breakout style, cancel and try style, Minervini-esque, you buy the breakout. Price starts to move in your favor. You get your stop loss to break even. Right? That gets your initial risk off the table. That's step one. Step two, let the rest of your trade run until it gets to your average gain. When it gets to your average gain, that's when you want to take off something. You want to start selling into strength. For me, that's roughly 10%. And that average gain, that's also a moving target, right? It's not your average gain for the entire history that you started trading. Take a look at your average gain over the last month, over the last couple of months. That's going to tell you something. In a very choppy market, if you're not gaining a lot of traction, you're going to want to take your gains quicker. If the market is rip roaring, you're going to want to give your trade some more room to run. I've had some halfway decent success, which is why I'm allowing my trades to run a bit more. I've got the twist. Let's talk about Burke, right? Let's follow up with Burke from last week. Now, this is one that Joe had asked me about last week. Joe was one of our members, and not was, is. Joe is one of our members, and he was asking why take this one ahead of earnings. And my answer was simply, it's setting up. It's set up in one of the types of patterns that I like to buy. This is not a pullback, but this is setting up in a cheat pattern. It's cup-shaped base, well, with a cheat area. So I bought it ahead of earnings. It gave me a little bit of a cushion. I took off a smidge ahead of earnings to give myself some wiggle room. The group was hot, held it, and now it's up about 20%. We discussed this one here, right? The first uh, trade smart Tuesday. Bought it there. This is something that you could repeat. You can do this. All it takes is having not just a trading plan, right? Because a trading plan, well, what's a trading plan? Somebody tell me what a trading plan is. Type into the chat if you know what a trading plan is and what you think a trading plan should include. Right? Do we need to start giving out prizes? Well, what would be a good prize? Well, what would you guys want? A trading plan should include at least the following: where you're going to enter, where you're going to exit with a loss, where are you going to exit with profits, how much you're going to risk. 4 things. That's it. It should have that at a bare minimum. What you also want, you want to go deeper than that. You want to have a business plan for how you're going to operate. So, what kinds of setups are you even going to take? Right? If pullbacks aren't the in your business plan, then don't take them. But what you should do, well, part of what your aim should be is to make something like this. This is a fairly simple spreadsheet, and I'll zoom in a bit so you can see it easier. We spoke a lot about pullbacks today. Today's show is all about pullbacks. And what you would want to do is make something like this where you define what that means to you. This is what a pullback means to me. Clear as day, isn't it? I have the time frame, how long it should be, the depth, the look and the character, the market type. I even have several boosters listed, things that'll take the idea from good to great. And then I have several models. That's what you want to have for your business plan. That's one of the things that you're going to want to have for your business plan. Well, what constitutes a thing that is going to trigger you to enter? Otherwise, you're throwing darts. Maybe some of them hit, maybe some of them miss. It's not the way that a business operates. If you want to operate your trading like a business, something that's going to pay you over and over and over again, you gotta be clear. Gotta be clear exactly what's going to trigger you to take an action. So, anyhow, that's the end of my rant for pullback buys. I hope that you found that helpful. If you have questions, now's the time, get them into the chat. But otherwise, make sure that you go over to marrowwealth.com/newsletter, put in your name and email, and get it onto the newsletter. Not only are you going to get trade ideas, you're also going to get lots of education several times a week. I'm trying to get this newsletter out every single day. That part has been a little challenging for me. I'm not much of a email guy, but I'm working on that hard. So little tidbits, little bits of advice, bits of education, all in the newsletter. So again, go over to marinwealth.com/newsletter, get on the newsletter. And if you have any other questions at all, please feel free to hit me up. Until next time, take care. Much love. God bless.